Welcome back, investors, to the Investing with Our YouTube channel for another portfolio update. And we ended last week on 133,736, and we end this week on 140,325 for an all-time high. So yeah, it's happened. So I've hit an all-time high again, which is really, really nice to see. Also broke the 140K mark. Again, beautiful to see. And the week we were up just under 5% for a £6,589 gain. So really, really happy about that. Long may it continue. Now, obviously, with a week where we're up almost 5%, there's going to be many companies that have done well. But the top three have been Oscar Health, which was up 14%. It reported earnings, which amounted to this. So earnings per share was a massive beat by 88%, going from $1.10 to $2.07, which is up 125% year over year. There was a miss on revenue by 6%, but overall, the fact that they've increased their margins by such a big amount bodes well in the future, and the market loved it. Went up 14%, and we're now up 26% on this position. We have 409 shares. This was down for a long, long while, and it's great to see that it's recovered and it's doing really, really well. In second, we have IREN, which was up 33% last week. Solid performance. This time it was based on a deal that it did with NVIDIA, where amongst other things, NVIDIA has the option to buy shares within IREN, amounting about 10% of its current float for $70 if it reaches a milestone of 5 megawatts, which is further down the line. But what's important, and I saw on X, for example, there was a bit of back and forth between people whether they thought it was a good deal or not. And I'm on the fence too, because they didn't reveal too much information regarding the deal itself, which includes NVIDIA buying some of its capacity. But what's really important is the fact that it's partnered with NVIDIA itself. The reason why some of the other competitors like Nebius and CoreWeave have done so well in comparison to IREN is the fact that they've partnered up with NVIDIA. And I wrote this post on my X account where the CEO of NVIDIA, Jensen Huang, has a very empathetic viewpoint of business. I watched a video of him doing a university lecture back in the day, maybe 10 years ago, where NVIDIA was a mid-sized company. And even then, he wanted to help other businesses like CoreWeave, like Nebius. And the fact that it's partnering with IREN now will really help its cause going forward. So maybe it wasn't the best deal that could have been announced, but this partnership for me is very good. Again, the market liked it, up 33% for the week. So really good. We have 154 shares. We were up on this, but we're more or less 1% down, which is really good considering at some stages we were down 30%. So this is really going on the right track. But the big one, and I haven't seen a week like this in my portfolio from any company really, up almost 40% within the last week. 40% on big numbers as well. So it's not a small company. So my average cost on this is $461. And now we're up 64% since I bought this. Now, I banged my drum on my YouTube channel for a long, long while about this stock and the reason why it was going to go up. And I wasn't expecting it to happen this quickly. But look, we're up 64% overall, almost £3,000. If you look at the month, up 86%. I haven't seen, again, a stock perform that quickly and that well within my portfolio. So if you were able to get in, well done you. And also well done on Micron on these fabulous performances. Now, with all this euphoria, have I considered trimming the portfolio? Yes, I have. Now, if we look at the VIX, it's at 17. I want to try to trim some of my holdings when and if the VIX reaches 15 or below. That's the sweet spot, really. If you look at the last year, we were around 15 or below. On the 11th September, we were below. Then in August, we were below. So these are the times where I believe trimming is good. And also, with the VIX being at 17, it does still mean that there's still a bit more momentum still in the market potentially. The portfolio can still go up. But I do want to trim. And the position I want to trim is Costco. We're up 22%. But I just feel that there's going to be some better opportunities within the market currently. And I'll talk about a couple of those afterwards. So Costco is one that I potentially want to trim. And the other one may be Imperial Brands. Like, we are up 50% on this position. It's a strong dividend payer, the strongest within my portfolio, but some of these other opportunities that are coming up might be too good to resist. And obviously I can rebuy these back later on. And the main one is this company, Corning. Now, Corning do optical fiber for many things, but amongst them, it's data centers. Now, the beauty of optical fiber is a lot of the data centers currently are using copper, and optical fiber is about 1/10 of the size. So for example, if you imagine the back of your computer desk right now, there's going to be many, many wires. I have, probably you have as well. But imagine all those wires just being one. That's essentially what Corning does. It's about 1/10 the size in terms of the cables. So for example, 10 cables will be the size of one. And what that allows you to do is just to get racks and servers closer. And also, as importantly, is its efficiency. So these optical fibers, in comparison to copper, are between 5 and 20 times as efficient. And these become increasingly important when there's more compute, which is where data centers and the industry is moving towards. So eventually copper will be hard to fit in with that many servers and racks out there. So this becomes probably the go-to technology for people to use. Now, if we look at the trajectory, it's quite high. The PE of this company is now 89.72, which is pretty high. I don't like to buy companies with PE as high as that. But what's interesting is the forward PE. Now, this is a very interesting metric. 44.39 is still quite decent. If you look at the shares outstanding for this company, it's also going down, which increases earnings per share, which is really good. And if you look at the sales, it's currently projected to be 16.32 billion. The market cap of this is 160 billion, which is not that big, which means there's potentially room for it to continue to grow. So overall, what I would like to do is obviously the market will pull back at some point, and when it does, I would like to add this to my portfolio. Themes are important within investing. So obviously the AI theme is currently the boom, but the theme of fiber optics here suggests that this company will continue to grow. So yeah, that is something that I intend to add if the market allows it. So if the VIX goes down, I'm able to trim my positions for the biggest potential profit. And then when Corning pulls back, if it does, then potentially I can add. Again, I don't like this PE number, 89 is quite high. I wish it was a bit cheaper, but it will be if and when there's a pullback. Now, the second stock I want to potentially add is this one, Caterpillar. Now, one of the main reasons was because I saw this metric. Caterpillar was negative only once in the last 10 years. I showcased this post last time in our last video, but I just can't ignore this. This is really, really important. Look, even during COVID, when the world shut down, Caterpillar was green. Even when the S&P dropped 19%, Caterpillar was still green, which is really important. Now, I have a few risky stocks within my portfolio now, which have the potential to go up, like Micron, but also they can be quite volatile. So to have some stability within the portfolio makes some decent sense, and Caterpillar is one that looks good. If we look at its metrics now, PE of 44.65, but a forward PE, which means the PE in the future with estimates of its earnings is 30.66, which is a lot more manageable. Market cap a bit high at 413 billion, but if we look at the shares outstanding, they're going down, so that means EPS can grow. If you look at the sales, again going up, 70 billion for the current year according to estimates. Now, one thing I look at, not every investor does, is return on equity, which is 51%, which is really, really high. If you got return on equity, which suggests how good management are, anything above 30% is really strong. And I like to look at that as a metric. Now, if we look at, this is also quite an important, short float. It's low, 1.65%. It's quite important because when the short float is high, for example, on HIMS, where the short float is 33%, it brings in problems of its own. When shorts are so high, meaning the betting on the stock to go down, it becomes a problem because some of these short sellers can put news within the markets. Especially when I used to own HIMS, it will go up and then suddenly there'll be an article, sometimes from years back, sometimes not even recent, or old news regurgitated, and the share price would go down off the back of that. So this is something that I mean, it's not the be all and end all, but again, it all forms part of the narrative. So CAT short float is low. This is good. So it's another one potentially I could add again if the market allows. Finally, one more that I like. Maybe adding 3 is too much, but again, just one that I looked at, which is Western Digital, another memory play, not too dissimilar to Micron, but slightly different, but they still provide memory and storage for data centers, amongst other things. Now, this one, market cap 165, not too big, so can grow. Then you have a P of 28.65, which is really good, and then a forward P of 27. If you look at their return on equity, 85%, this is a number that really stood out to me. Western Digital was not something I was going to mention within this video, but this number is really, really solid. Short float, 7.8%, not bad. If we look at the trajectory of this company, it's going in the right direction. 11.7 billion in revenue for this year. This is really good. Shares outstanding going up, so a little bit of dilution, which is not ideal, but again, strong, and another one that potentially could be added. So if and when I do add to my portfolio or sell, I do mention it on my Substack, usually within a few minutes after I've done it. So if you want to get live views on my sells and buys, then please join my Substack. It's free. However, there is a paid option. Now, I want to give a shout out to my first paid subscriber. Big shout out to Manny. Thank you very much for that. I really appreciate it. Now, to subscribe and be a paid member is not very expensive, but it really makes me happy because it means that my videos and the information that I give out is valued by the community. So thank you very much again, Manny. And if you do become a paid subscriber, then I will look at your portfolio and let you know my thoughts. And if you have any questions, I'll answer them. So yeah, thank you very much. But again, free to subscribe if you want live updates. And while you're here, if you can give the video a quick like so other people can see it, if you subscribe to follow my journey and see how the portfolio does. Okay, so let's look at the portfolio overall and the positions. So Google, absolutely flying, had a decent week where it went past $400. If you look at the month overall, up almost 26%. So really strong performer. We have 81 shares and we're up 13.3K. Wow, amazing. The profit alone is bigger than my second biggest position. And remember, I talked about PE and forward PE. One of the big reasons I bought Google was because it was PE under 20. So I loaded up last year and the forward PE was a little bit lower actually. And this for me was a pretty big buy signal. And as you can see, a company like Google should be at about 30, 35 PE. And for it to trade below 20 was just massive. So this is one of the reasons why I loaded up. And as you can see, we've done really well on that. Now, Meta, we're currently down on this position, but this is the one similar to Google. Meta is not as a good a company, as diverse a company as Google. I think Google is the best company in the world. Look at the PE ratio, 21.89. So this is one I believe in the future can run. So this is why it's the second biggest position. Nvidia, moving up the ranks, becomes an 8K position for the first time since I've owned it. And we're looking at 50 shares where we're up 76%, almost 3.5K in gains. Broadcom, so these are my two semiconductor picks. The fact that I have these two meant that I don't have AMD. If I didn't, I would probably own AMD because of its chip prowess. But I own these. But these have done well for me so far. I'm up 95%. I'm probably a bit safer right now with AMD on its massive growth trajectory. Micron, look at this. It's got into the top 5 and I've only owned this since, I think, February, March. Not long at all. And the rise of this company has been parabolic. So up 64%. Then you've got Robinhood, which is down 33%. One of the few companies that I'm down on right now. This one will recover. Again, I think this one will take a bit more time. So we'll see how it does, especially if crypto has a good run, which is due for it to do because Bitcoin especially has historically been the fastest growing asset in any, out of stocks, any company, it's been the fastest. But the last year and a half or so, it's been a bit depressed. So that could rise. If you think in stock terms, Bitcoin has a low PE ratio right now. So that one could run. Imperial Brands up 51% on that one. IREN, as you saw, I'm pretty much break even now. I was up a little bit last week when earnings were first announced and it went to 72. Currently it's at 60. So yeah, this one is back on track and almost a 7K position. Then you got Visa, where we pretty much break even at this one. Hopefully we'll have a run. That and MasterCard, I always bunch them together because I more or less think that they're the same company. I can't differentiate, but they're meant to be solid holdings for my portfolio, so they don't go down too much. Generally, they go up about 20% per year, but obviously the last year it hasn't done that. Maybe because I've owned it, I don't know. But these two will go up. Oscar had great earnings, up 26%. This was down 30% for a long while, but this has recovered now. Again, if you've enjoyed the visibility on my portfolio, and I have showcased my portfolios from 73K all the way up to 140, so almost a double, including the good and the bad. So please give this video a quick like. It's free to do, but it helps the channel grow. Subscribe to follow my journey, and we'll see where we get to. Carnival up 83%. Another one potentially could trim, I don't know, but it's performed quite well. MasterCard I mentioned along with Visa earlier, we're slightly down 7%. Then you've got Microsoft, which I believe will have a run this year. We're up just under 3%. Tesla had a good week actually, up almost 10%. We have 18.8 shares and we're up just over £2,700. Then we have Amazon up 40% almost. United Health in the green. Again, this was down for a while, up 6.75%. If you look at the month for this company, we're up almost 24%. We hold 18.8 shares and we're up £330 for now. Then you have Centrica up almost 80%. Grab, that and Hood, two big losers within my portfolio. Now, I want to mention something about Grab. I think this is a really good company. They had good solid earnings and I think it will do well. I would love to add to this to lower my cost basis, but I don't know if I can with Corning and Caterpillar up there. I'm not sure I can justify it, but this company will do well going forward, so I'm going to hold that one. Costco up 22%. I will sell this, I believe, once the VIX goes 15 or below. Then we've got Apple up 45%, small holding of mine. And then the other two small holdings, KLA and ASML, up 118% and 85% respectively. Again, if I didn't own, again, two solid performers within the portfolio. So that's it. Portfolio hits an all-time high, 140K. Really happy. Long may it continue, and I will see you on the next video.